Hey everyone, it's Adam back for another video. Today I'm going to go over a video. I'm going to title it Recession Watch because it's my belief that I think within the next 6 months, there's going to be a recession. And I'm going to go over a few reasons why I think this. Today I'll go over the commercial real estate market, auto loan delinquencies, and um, an article from Lacey Hunt of Washington Capital to kind of elaborate on why I think there's going to be a recession. It's another hot one down here in southern Arizona. It's over 100 degrees today. I just said on a previous video, like our power went out. We had a big storm, and I think it's actually supposed to get in the 90s next week, though, for July, August, like really abnormal for down here. But I'm sitting in my apartment, just kind of sweating. So try to get this through this video, and let's bring up some different articles I found online. Some interesting articles here that will kind of go through why I think we're gonna get a recession. So the first one here, well, I didn't bring up this article on the screen share, but if you want to check out an article, it's in Fortune, but it's titled Morgan Stanley says commercial real estate will crash harder than during the great financial crisis. And an article here from Yahoo Finance, and I'm just going to read through it. So the commercial real estate market is tumbling toward a crash that could be devastating as the 2008-2009 crisis, according to CEO of a major real estate investment firm. Patrick Carroll, founder and CEO of Carroll, sounded the alarm about the state of the U.S. commercial real estate market in April 2023 interview with CNBC. The party's over. Unfortunately, he said, the office market is going to be destroyed. Hotels are going to be destroyed. It's going to be ugly. So, nothing encouraging there. And then there was another article from Yahoo Finance, and it's Barry Sternlicht, and he said surging interest rates and the rise of remote work have combined to create a nightmare scenario. Or actually, he didn't say this. This is Yahoo Finance, and then I'll get into his quote. So surging interest rates and the rise of remote work have combined to create a nightmare scenario for the commercial real estate investors. Just ask Barry Sternlicht, co-founder, chairman, and CEO of Starwood Capital Group, a real estate investment firm with 15 billion in assets under management. There's a hurricane over real estate right now, the billionaire investor told David Rubenstein, co-founder of the private equity firm Carlyle Group, in the interview from Bloomberg. We're in a Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief, some understanding of what the Fed is going to do over the long term. And, I think, Chairman Powell's been pretty clear in the last meeting that he's going to, engage in a policy of monetary restriction. Right now the Fed funds rate's over 5%, and I don't see him reversing this anytime soon because he seems really intent on fighting inflation. The next sector of the economy where there is trouble is the auto loan sector. And this is a report from the S&P 500, a special report from S&P Global Mobility. Auto finance delinquencies rise past Great Recession peak. And in the article, it does say that the delinquencies are happening more amongst lower credit borrowers. So the higher credit borrowers haven't been hit as hard. But still, it's a concerning statistic when the delinquencies are rising past the Great Recession peak. And then I'm going to go into the article here from Hoisington by Lacey Hunt. And you can find this on their website. It's really informative. It's about 6 pages, and it goes into detail on their perspective on the economy. So what it says here is monetary and fiscal indicators continue to tighten significantly in the second quarter, pointing towards a material slowdown in the U.S. economy. Negative money growth, increasing fiscal deficit, rising real interest rates, and central banking guidance of higher short-term interest rates are creating a classic credit crunch. This credit crunch comes as the economy progresses further down the current financial cycle, slowing growth and limiting upward pressure on inflation. So, as we've gone over in previous videos, the credit card debts run at about $1 trillion with the average APR at 24%. So, this doesn't indicate a consumer that's willing to, go out and go on vacation at these, when they're really indebted with credit card debt and other household debt as well. And this is from the New York Fed. It's from the first quarter of this year. And the New York Fed had a household debt and credit report. And in that report, it said household debt rises on higher mortgage, auto, student loan balances. So household debt rose by 148 billion or 0.9%, 90 basis points to 17.05 trillion in the first quarter of 2023, according to the latest quarterly report on household debt and credit. So I think it's a situation in one of my beliefs on why we're going to get a recession in the next 6 months is because of the indebtedness in the economy, whether that be the commercial real estate markets, auto loans, credit card, revolving credit. I think that's going to be why we're going to tip into a recession. This could take a while to play out. So I could be wrong, but I see some data here that's just not encouraging. So this will be my first installments of Recession Watch. So I'll try to do a few more because I think there's some other data points that indicate towards it. But I hope everyone is having a great summer and a great day. And I'm going to sign off for now and take care.